Yeah, I'm losing my edge.
You can save yourself here. We can go double jeopardy. Where is gold going? Can you answer me that?
I'll take metals for 1,000, Alex. Thank you. Well, I'm hoping that they go lower, that this is a little bit of correction here in gold and less so in the silver. But, it's interesting. I looked at some silver strangles. This, honestly, I sold Spree yesterday, and I sold a couple more this morning. All my trades are underwater right now. Yeah. I'd say out of everything, this is the weak link of I've got an average price of, it won't even show me. That's a bad sign. No, 77.61.
They lost it. They lost your prices. They're 66. So far away.
So I'm out about $60 per contract.
But that's the nice thing about that. Like, Pete, you and I have traded, you've traded way longer than I have. I mean, look at us. But you and I have traded between us a lot of years and a lot of different products. Now, if you were to say I'm getting absolutely run over by this futures product, XYZ, and like I sold it yesterday, it went through me yesterday, and now it's up again today, you would usually think like, oh man, that guy's out thousands of dollars. He's screwed. But with these Spree contracts, /SPRE, one of just the 4 products at the small exchange here, and soon to be 5 if you keep your ears peeled for the next month or so, the losses usually only amount to, like you said, like $60 to $100 per contract. Now, of course, metals have moved a lot in 2020 here, and they could move another $200, $300, $400, even $500 through you as an outlier move. But it's nice to get these futures that move back and forth and the efficiency, so your capital is on the move, but it's not that big price tag that, like, if you were to get run over from yesterday, you'd be out thousands of dollars. I mean, look at the NASDAQ. If you sold NASDAQ any time in the last 12 hours, the big contract there, you're out at least thousands of dollars on that.
Yeah, if I had sold a single gold contract, I'd be out about $3,300. Now, I've got about right around 10 lots of these sprees, and I'm out about $450, which doesn't mean I can just let these go longer because there's less paying to them. But the idea that I can get in around a couple of levels, I have an exit level when I'm wrong to modify that. But I like the idea that scaling 1 or 2 here is an impossible feat in any of the existing futures products. So it does, we talked a little bit about this. The smaller size and the smaller movement it gives you a lot of comfort. I feel comfortable. I'm not feeling emotionally driven to manage this position. Doesn't mean my mechanics go away. The same mechanics hold, but it lets you stay mechanical and comfortable around them. So 2-sided trade here, absolutely. We got an interesting reflexive bounce, and you were right. Yesterday, before we saw that gap lower in equities right at 5 o'clock when the markets reopened, silver put in its lows during the day at $26, and we're already at $1 off of that. So part of me with Spree was, I don't know which one's going to, is silver going to be the one that goes to 28 quickly, or is gold going to get back to 1950? I wasn't sure which one to pick, and if I had picked silver, I would be sitting on a scratch for the day. That doesn't mean I would have picked the right one. It didn't do what I expected it to do, which was be the mover. So I think I didn't want to have the selection dilemma. So that's why I really, it's not an either or. I don't have to pick smalls products or other futures products. It's a mixture of both. But when the selection choice becomes challenging, I like to go to the simple expression of opinion.
Sure.
So where do you think gold is going, my friend?
Yeah, so let's be a little bit selective here, just for the sake of storytelling. I think the writers of The Little Mermaid would appreciate it. So we're going to look at gold and the historical prices for gold.
You are the schnauzer of analogies. Just won't let go of it. You're freaking Tucker. Three legs and won't let go of his toy.
So if you bought gold back around the time that Little Mermaid came out, you were doing pretty well, because it's it's been gradually appreciating. And then I guess you could see that 2010 until now has been a pretty normal, I would say, trading range for any asset class, where you saw in early 2010s new highs in gold, comes back to 1,000, gets as high as 2,000, comes back to 1,000, and then a lot of bouncing around. And now recently we've put in all-time highs since they started trading futures on this product in, I believe, the 70s. Maybe it was the 80s.
In the mid 70s, when Richard Nixon, who was a previous president of the United States,
I don't know him.
Took us.
I know Sebastian. Yes, I know Sebastian from The Little Mermaid, but I don't know who Nixon his name is. Never heard of it.
Yeah, our currency used to be fixed against the rate of gold, and they decoupled. They basically created floating exchange rates.
Let's hope they never make a Disney movie on this, because this is putting me to sleep.
It's actually the least relevant thing that will put $1 in your pocket that we've mentioned over the last month. So
I'm not gonna put $1 in your pocket to keep telling that story like I would if they did create a new, maybe like live action Little Mermaid. That would be cool. Like the people are actually under the sea. They get that guy from the superhero Aquaman. Maybe he's in it too. I would see that. But I
want to go back to the concept of
Richard Nixon gold story. I want
to go back to the concept of putting money in my pocket.
Never happened.
I actually reverse Venmo'd you for an amount of money, and I don't know if you got the notice.
Did you? You did not request a Venmo from me.
I did, or a Zelle or whatever you call it.
A Zelle? Oh, maybe that got lost in translation.
Of course it did. And after 5 days, it said your request was rejected, and it fell hard.
Yeah, I'm not putting any money in your pockets, but I would if you could tell me where gold was going, because now gold it's had this wild 2020, right? Where it's ascended to new all-time highs after honestly being kind of down on the year here. Remember when it was circling 1,500, we were like, we get in this mode, especially in the last 5 years or so, where it was like, because I mean, look at this chart where it's made these highs in early 2010s. And then every time gold broke down below, 1,200, 1,500, whatever, it's like, man, these metals might go back to historical lows. Nope, they went to all-time highs here. But Pete, it's been an interesting month now because they've settled into a bit of a range, albeit volatility around that range, huge moves here, bouncing between, call it 2,000 and 1,900. But it makes this question a lot harder. And you and I like to talk about how we trade futures often from this neutral standpoint. Like the last thing I want to do is read a bunch of words from some schmucks at these different publications and then have to like.
This is why I use the word chucklehead. But
formulate an opinion around it. Like I don't want to have to read the Journal and the Economist and then be like, all right, now I've decided that gold is going lower. What we want is just markets that move back and forth, that kind of push you into a position here. And so while we're not at those highs, we are, I still think, maybe in the best trade for gold and metals of the year, of the last few years, I would even contend. And silver, like you spoke to on the front end of this segment, has been no slouch either. SPRE gets both of these metals in there. Silver, the more volatile piece, you can see higher extremes and bigger percentage moves. Albeit not the price extreme that we saw in gold. And so SPRE is this nice little middle ground here that captures the volatility of silver and the extremes of gold. And we've gotten to this point where, Pete, to me, it's not really that interesting to say, okay, gold is going to 2,100 or gold is going back to 1,700. I'm just having more fun riding the roller coaster right now of what is SPRE between $80 and $75, seeing both sides of that range multiple times over the last month of trading.
Yeah, absolutely. And this is, we always talk about respect the range. If you had looked for that high print, you would have been unengaged. And if you were fearful of buying 77s because back in April we were looking at 50, you were disengaged. Here, again, sticking with metrics of directionality of both P&L, profit and loss, look at the back and forth you got here. And, when we talk about that comfortable level, you don't have to trade 10 of these. Start with one. Build your strategies, build your mechanics. Let them become second nature to you because, guys, it's one thing to say, well, I made $30 on this trade. I think you got a great response is, hey, I scalped $30 in smalls. It bought me me and my girlfriend a pizza and a bottle of wine. And fantastic for that. The idea, though, that if you oversize in times when the market's really moving, that's where everybody tends to come under stress because all of a sudden these big products are like, God, this is moving much. I thought I would have time to make a decision. Well, if you haven't made those decisions ahead of time, you never are given time under stress. So here's a situation where you had a lot of back and forth, all within a very comfortable level. Build the mechanics, let the market feel, because we had some times where we had some fairly sizable bounces and corrections, albeit on a smaller dollar move because it's a smaller notionally sized product, but it lets you build those mechanics when the market's moving in a more measured and metered fashion or a fast measured situation, and then build on that.
Well, and what you want, well, what I want, I can't put words in anybody else's mouth, but what you want is increased movement here. You see a lot of these days that are 2 to 4%, a lot of these days that are 2 to 4%, where without these bigger outliers of, 6%, 5%. Remember that one day where metals were down almost 10%, because those outliers are usually when you're going to get caught. And as you can see here, since this big outlier of early August here, it's been just a ton of 2, 3, not even reaching 4% days here. And when you apply that to this market, it's so much more interesting to me to trade those 2 or 3% daily moves, which we've seen as recent as Friday of last week. Today, SPRE is up about a percentage point, nearing another little bit of an extreme as it gets closer to 80. So much more interesting to trade, 1, 2, 3, 4, 5, 6 potential trades here in this confined range and bringing a more short-term mentality to it than playing this game. I mean, you and I make fun of people all the time who get on their soapbox and they're like, in the next few years, gold is going to 6,000. And it's like, all right, sweet. Like it could happen. Well, what are you going to do? Just buy gold and hold it for the next decade? I don't really understand even bouncing this out from a couple days or a couple hours of trade to even like, why do you want to confine yourself to say, all right, I need to see 70 or 85 or 65 or 90 or anything. And it's going to take, and it's going to take weeks and weeks or potentially months to get to those levels, even maybe years. Like this is the biggest year in metals in in the last decade, probably. Right. And so waiting for this, it's just like it's an exercise in never clicking, right? Like it's like I'm just going to wait for these things, and it usually never happens. And so thus you're not right, but you're not wrong. Take advantage of this back and forth that we're seeing with this small metals product that, if you saw I'm looking every day in small precious metals for a move that's 1, 2, or 3% and just getting on the other side of it. You can assign whatever strategy you want. In a market like this, Pete, 1 or 2 or 3% is $100 or $200. Right. In a market like this, Pete, 1 or 2 or 3% is a couple $1,000. Yeah. So, start to apply that strategy with something that's smaller. And like Pete said, makes you more comfortable than traditional products like gold.